Hi, once again, I'm back, Kaushik Chatterjee. In this video, we are going to discuss something related to your life insurance. Very interesting. 4%, 8% in your illustration. What do you mean by these 4% and 8% returns? Most of the people, even people are from this insurance company, or they are going to even discuss any kind of policy to their customers, or maybe customers is going to even discuss any kind of their financial consultant. Somebody is coming from an insurance, especially life insurance company. They will not be able to understand. Even some people will not be able to discuss or maybe even disclose like what exactly this 4% and 8% returns on in your illustration it is showing. What is all about this? So in this video, we are going to discuss what is this 4%, what is this 8% returns, and why you need to maintain. Every companies, they have to maintain in their even illustration, especially when they are going to present to their customers, even let's say any kind of discussion, why it should come, like what exactly my money, how I am going to get the rate of interest or returns, all those stuff. So let me tell you, this 4 8%, earlier it was 6 to 10%, now it is 4 to 8%. So people, let's say somebody has taken a old policy, let's say 10 years, 15 years, 20 years back. If they look at, and they will be thinking, no, my policy is showing 6 to 10%, what Kaushik is talking about 4 to 8%. So as I told, 10 years back the illustration was different. Today the illustration is different. Now why this is fluctuating? So that also I'll tell you why this is fluctuating. And somebody has already purchased, somebody has already bought, even let's say 10, 15 years back, and they might be thinking, so am I the gainer? Or somebody is purchasing here, even here, they are the gainer. So I'll tell you, the 6 10% what you have already received, or maybe it is showing, let's say at the time when you took actually the policy, and today even somebody is going to purchase it, is why it is 4 to 8%. So let me tell you, this all depends. The 4 8, or let's say it is 6 10, all depends first and foremost thing on your current even FD rate. It relates to your all even rates. It cannot be even more than that. The financial even projection, it cannot be more than that, because as you know, all the financial body, even all the financial even companies, they even have to follow even some kind of certain even regulation, even through by their regulatory body. So insurance, there is a different regulatory body, IRDI. So already you have discussed what exactly IRDI does and what is the regulatory body all about. So you can go and watch my IRDI video, and then you can come back to watch this video. So it depends on time. Earlier, definitely the rate of interest, even as per banking rate of interest, especially the FT rate of interest, if I look out, I have to align even with my insurance product also. Today, if I look out the returns, even the banking returns, I need to align with my even life insurance product as well. That's what this variation. So this is the first thing we need to understand. Even earlier it was 610. That time the scenario was different. That time the projection was different. Today again, if I look out, then this projection is different. And definitely, as I told you, this should be all aligned with my banking rate of interest, with my fixed rate of interest, whatever you can say. Second point, where it applied even for all these insurance products. So let me tell you, whenever this kind of illustration even somebody is showing you, or you are going to see all this 4 8 or 610, whatever you can take as an example, this is only applicable only for your participant products only. So what is participant product, how it works, that already I have discussed in my participant video also, participant products even video, insurance video also. You can just watch, you can just go watch this video, and then you can come back to this video, so that you will have another clarity like what exactly this participant product itself. So as I told you, so first point is clear, second point also it is clear, that how exactly and which products it is going to be worked. Now the third part is why I need to show to the customer. Because whenever, let's say, if as a even financial person, or maybe even as a customer, what will be my actual expectation. If I'm going to invest, let's say XYZ amount, what will be my returns of this amount even after 10 years, even after 20 years, whatever, based on your product, based on your whatever XYZ terms and conditions. So that will be the first thing. Even it will be like haunting in my mind, what exactly I'll be getting. So as an insurance person, as even insurance company, you are also not going to even give a clarity. You are not even exactly, you cannot give the XYZ amount. So this is a projection. If my product performs good, if my company when performs good, all this XYZ parameter performs good, you are going to get maybe on the higher side 8%. If does not perform well the XYZ parameters, then you are going to get between 4 to 8. So lower side 4, upper side 8. So in between, you are going to get. So that is one kind of promise, one kind of a statement you are going to get from this financial institute, from the financial organization, from your insurer, from your insurance company. And based on that one, you can also get a projection. If I'm going to get on a lower side, this will be my returns. If I'm going to get even on a higher side, this will be my returns, because it is not guaranteed. And that is what this projection is coming between this or that, because you do not know what is going to happen tomorrow. A financial projection also cannot be exactly the dot what exactly they are going to tell. Yes, if you are going to look out even something dot, if you are going to look out even something entire committed, entire even, let's say, X amount on X returns only, there is a different products, there is a different scenario. But 4 to 8% illustration, whenever you are going to see, whenever somebody is going to give you this presentation, you have to make your mind that yes, I'm going to get this lower side, that on a higher side, or in between something, right? So anytime if you're going to purchase any kind of insurance plan, if you're going to discuss any kind of your financial consultant or maybe an insurance advisor, so when they are coming as a layman, you also should know that what exactly I'm going to expect from this, what is all about my discussion. So if you have all this prior knowledge, so it will be better for you to save your family, better for you to save even your entire even financial barrier. Even it is better for you to choose even any XYZ kind of products, even from that insurance company, from that even financial institute, what exactly they are offering. If it is not going to work for me, definitely I can jump to any other products, I can jump to any other kind of discussion, any other kind of better product which may be even fitting for my requirement, what exactly I'm looking. So it's all eye opening for all of us. If somebody is watching this video, somebody is going to get all this even information from this video. So it is your money, it is your life, it is your family. So you have to choose wisely. What somebody is telling, what somebody is going to project to, that is not important. It is you, you are going to take the decision. Right? Thanks. Thanks for watching.